I'm Shiraz. I am CEO of Credit Ladder. Credit Ladder essentially helps tenants improve their credit position by paying their rent on time. So if you're a homeowner, your mortgage payment is taken into account when lending decisions are made. Historically, if you're a tenant, your biggest expense typically is your rent, unless you have an extremely extravagant lifestyle. But that rent payment was never factored into the decision-making process. So we've been using open banking almost since day one. Over that time frame, we've seen adoption grow on a monthly basis. And our position is relatively straightforward. We want to make rent count, and we want tenants to be rewarded for paying their rent on time, just like homeowners are when they pay their mortgage on time. We, as a business, are clearly not a lender. So, from our perspective, there's two core elements to what we do. The first one is we supplement rental data into the aforementioned credit agency. So we verify rent payment data, and we supply that into both Equifax and Experian. That's then built into that appears then on the statutory report, and that information is available for lenders. On the B2B side, we also do tenant referencing, and actually at the crux of tenant referencing is affordability. So we will look at income, we'll look at expenditure, and we'll look at, for example, if the individual tenant can afford the rent that they're looking to pay. Now, actually, that same process can also be applied to other areas. The capability in open banking is very powerful. You can use it for clearly decision making. You can use it to gather insight. You can supplement information that's already available. So rather than pick sides and say, actually, someone isn't doing what they should be doing because they're missing a trick, I guess my view is we're here to supplement information that's readily available, and we're also here to provide information that isn't readily available. Internal transfers, creating pots. If you're doing open banking analysis, they are a bloody nightmare, right? I want to know who the money's been paid to, rather than know what the description is, right? Because having a description doesn't help me, because I can write any bloody description on there. What I'm interested in is who has that payment gone to. And so therefore, even though, we use open banking, lots and lots of businesses use open banking, it isn't a magic, let's stick it in the computer and get a result. You have manual intervention, right? Because a lot of the stuff that comes out, we were doing some work today around categorization, and there was an individual that had four different income streams, right? This isn't, when I started work, I got paid every month, and it was pretty much the same amount of money, and had my one employer's name on there. So you could look at my bank statement and it'd be very bloody obvious what I earned. Now, actually, yes, we have the technology, but the inputs into that technology, the inputs into the kind of bank account are not easily understood unless you fit a very, very specific scenario. Everything needs to evolve, and the information now that's available to us allows us to make decisions in theory much quicker. But I think the challenge is it's not an automated process. You will always have multiple edge cases, especially today. It's actually not even edge cases. They are like 20, 30, 40% of the people you've got the data, but actually it's not necessarily giving you the answers. So the conversation needs to be two-way, and therefore will take more time, and it doesn't have the immediacy that some people necessarily want. So yes, we supply to the reference agencies what we think is a key data point that we look to verify, and we will absolutely continue to do that. We will also supply that information and our analysis of income and expenditure to any other business that values it. So from our perspective, we want to both supplement and improve the decision-making process.